Welcome to the 1 to 1 Million podcast, your weekly crypto alpha for those who never quit. Today, we're going to be mapping the 2025 crypto bull run, looking at historical patterns that we've seen in past crypto cycles and how those might overlay in the 2025 crypto bull run. Everything from what should we expect the second half of December to when will alt season start to, what's the price action of ETH? Typically, what does it typically look like throughout these cycles? We're going to dive into the two legs of a crypto bull run. So actually, a crypto bull run isn't one consistent up-only process, but typically there's two very distinct cycles within a major crypto bull run. And so it's like two bull runs basically within a bull run. And how does that look? What happens in between? And what assets do the best during the first leg of that, and what assets do the best during the second leg of that? We're going to be diving into all those details, plus much more. This is something I've been researching and thinking about for a little bit. It's going to be a really interesting thought experiment and kind of a way to go through these things and maybe give us a framework for how to view the 2025 crypto bull run. Let's dive in. So as you guys know, and as I've talked about quite a bit in previous podcasts, YouTube videos, newsletters, etc., crypto typically has some sort of pattern to it. We call this an analog, where you can look at past events or things that have happened in the past and have some sort of reasonable guesstimate as to what could play out in the future. Crypto specifically tends to be very, very pattern oriented, and these patterns, for whatever reason, repeat to like near perfectly. It's near the exact same pattern every single cycle. A lot of people have a lot of guesses as to reasons why it plays out like that. And we're not going to really dive into that in the scope of this podcast episode. The point is, there's a lot of evidence that seems to show that these patterns are consistent, and there's everything that this cycle points to the fact that the pattern is playing out, at least up until this point, perfect. It is like executing to a T exactly as it has in the past. And that gives us somewhat of an indication or somewhat of a direction that this possibly could just play out as we've seen in past cycles, almost near the exact same way. So evaluating how the cycle has played out in the past is somewhat of a good indicator as to what might actually unfold in this cycle. So that's why we're diving into these things. And we're going to start in December. Okay, so in December, typically in the second half of December, so like December 12th, 13th, on to January 1st, we're really focusing on this because this is a really important piece in the 4-year cycle, specifically the year before the bull run. So in the second half of December, the year before the bull run, we typically see a massive parabolic rally in crypto. So just a massive jump up in price. So if you go back on the charts, you look back at 2017, you look back at 2016 December, you look at 2020 December, you'll see that in the second half of December, the prices just rally like crazy, like totally crazy. And if you look back at the 2017 cycle in December of 2016, we rallied up starting about there, like second half of December, we rallied up. And then what we typically see in early January is then this massive retrace, like this massive crash. Because we rally up so far, like leverage enters the system, all this kind of stuff happens. It's like our first test. It's our first major pullback. That's I've been talking about this a bunch, that I expect some sort of dip in January. And typically this dip comes from this insane rally that we experience. And in the 2017 cycle, we saw a rally up in late December. Okay, we rallied up. And then early January, we dipped back down, basically back to the start of the rally. And actually, we wicked a little bit lower than that. So it allowed a second buying opportunity for people where, had you bought at the start of the rally and had you bought in the dip, you could actually get maybe a slightly better price, specifically on Bitcoin, a slightly better price on that dip. Now, that's not saying the same for all these alts. So I'm sure some of these alts just maintained their highs. I'm sure they dipped, but they didn't dip quite as hard as maybe where they started. So that's what we saw in 2017. In 2021, it was actually a little bit different, where we started this rally in mid-December. We rallied up like crazy, same kind of thing. And then we dipped in early January. And typically these dips are about a 30% retracement for Bitcoin. So if you actually go measure both of them, they're weirdly both 30%. And this is where I'm saying these patterns repeat every cycle. It's weird how, eerily weird how similar these things are. There's a lot of different theories as to why. I'm not going to dive into those things on this episode. But just to kind of show you, it is it's like almost like the same song playing on repeat every 4 years. So in 2021, December 2020, we saw this rally, and then we saw this dip in January. Now, the big difference between the second rally, or between 2017 and 2021, is this second dip didn't even come close to where the rally started. So we like started the rally for Bitcoin around $14,000. It's kind of small. Oh, there we go. We started, $18,000. We started the rally about $18,000. We went all the way up to about $42,000 Bitcoin. And then we dipped down, even at the lowest wick, to only about 28,000. Okay. So we went from 18 to 42, then we dipped down to 28. Okay. So obviously it would have been way better to have bought at the start of that rally. And you weren't given a second buying opportunity in the same way. Where in 2016, we started the rally, this kind of like parabolic rally in like closer to maybe December 19th on this chart, it looks like. And we went all the way up to, so we started at 753-ish, 780. We went all the way up to 1,100 Bitcoin, and then we dipped back down to about 760, okay? So that gives you an example of like between the two. In both, you had a 30% dip. In both, the second half of December, we saw a crazy rally. And but the big difference is, one, it was way better to have gotten in at the start of the rally. In the second, in the other one, the 2017 one, I feel like it was still better to have gotten in at the start. And I'm saying this because a lot of people are asking me, like, should I just wait to buy for the January dip? Again, I don't give out financial advice, but like my general thought process is that, like, no, you shouldn't wait to buy. You should be buying right now, because you don't know if it's going to be like the 2021 cycle where it goes way higher and only dips a little bit, or it dips all the way back down. But either way, it's like, had you bought in 2016 and it dipped back down to the same prices, it's like, like you don't care. It's not like you lost any money, especially considering what happens after this dip. Okay, so it's better to not try to time the dip and just be in the market because of what happens after. Okay, there's a lot of people that sell in this dip, and it really sucks for them, because typically after, what you see is just an insane rally. So, okay, so I told you in 2017, the market started at, 780 or whatever. Well, after that rally, Bitcoin went from 780 all the way up to $20,000. I mean, on the chart, it's just like insane how tiny it is, that even the dip looks tiny on the chart. So you really don't want to miss the monster rally that typically happens after the dip. And so it's just better to be in than try to time it. That's from my experience. Like, I personally don't try to time the dips. It just sucks if you get caught on the sidelines. It really sucks if you miss out. And again, not all these alts dip in the same way. So for me, I just would rather ride the roller coaster. Hold on for dear life, because also you don't know it's going to play out exactly the same. What if we don't have this major rally later in December, and then we don't have this crazy dip in January? What if it's just like a slow build? Again, history doesn't often repeat it, but it kind of rhymes. So even though the patterns played out to a T perfectly every single cycle, historically, like the exact same pattern, eventually the pattern will break. And you always got to assume this, and this is the hard part, is you always have to assume that this cycle will be the season when it breaks. Again, all indicators don't point to that happening right now. Everything suggests that it's going to repeat again, but you still got to be on your toes and watch out for the possibility that it won't. And so I'm not trying to time it. I'm just sitting in the market. I'm waiting, because historically we see this massive run up in the second half of December. And, the dip may or may not provide a better entry. And I don't really care about timing that. Now, in the midst of this like late December run up, in the midst of this 30% January dip, you typically see a handoff in the market where the price action hands off from Bitcoin leading the market to ETH leading the market. I've covered this already, just a ridiculous amount. So I'm not going to really dive in too much, other than to put it on the map for this episode and say that typically late December, early January, we see ETH kind of take over price momentum, show an extraordinary amount of strength, and kind of build up these wealth effects that end up pouring down into the alts. After this, and after the January crash, we typically have alt season. And this is a very specific definition of alt season on my behalf. You could define alt season as starting in November if you wanted. You could define alt season as starting in late December, early January. But I'm kind of more talking about the mania part, the part where like everyone is kind of feeling really, really good about alts. And you really start to feel that in February. In February, you really start to feel like, wow,
alts are where it's at. Alts are where the money is. That's where I want to have my stuff invested. And obviously you want to be allocated into alts before this. You should have already been allocated into alts already because they've done amazing so far. But February is like really when like it's kind of more consensus. People are really feeling all season. That typically starts in February. If you look at past cycles, that's about where that part of it lands. Now I'm going to pause here and actually got some questions from members of the Obsidian Council about kind of this mapping out the bull cycle. The first question is from Chris, and he said, I'd like to know about your thoughts on ETH going parabolic, when that'll happen, and what to do when it does. Like when to rotate into other alts and the timing of rotation from ETH, whether it's ETH at 5K or 8K, etc. And basically to answer this, it depends heavily on your strategy. Okay, so if you're taking a safer approach, it's more of a season to rotate from Bitcoin to ETH. Because if you hold you're trying to be more conservative, you have more of your funds in Bitcoin. It's more of a season to rotate from Bitcoin to ETH. Less of a season to rotate from alts to ETH. Because after that, alts really hit hard. And, I've obviously like Bitcoin might do a 5X each cycle. Maybe ETH does a 10X. And then, maybe some of these alts do a 20, 30, 100, 1000X. Like, the smaller you go down the stack, the higher up those things can go. And the bigger an asset is, the harder it is to move up. And so it's not gonna be any different this cycle. It's still gonna be really hard for Bitcoin and ETH to move up. They're gonna be a safer asset, a more conservative play, but they're not going to move up as much. So it just depends on how you're playing it. In my opinion, I'm already positioned in alts. I've already allocated quite a bit out of ETH, and I don't hold zero stables right now. I'm just fully positioned in alts, and that's how I like to play it. But it's very specific to you and how your strategy, how comfortable you are with risk, all of that. Kind of going along with this question, Marek asks, do you see a possibility with all the Bitcoin news and expectations that ETH will underperform Bitcoin? There's plenty of great news for Bitcoin, but nobody's talking ETH. Second question, do you see Bitcoin low and next bear under 100K? That question is meant for people who want to buy and hold for 10 years, if they should buy now or wait for the next bear for better price. Okay, so it's kind of two questions in one. I'm going to answer the first one. So I think there definitely is a possibility that Bitcoin somewhat keeps up with ETH, and maybe like a really slim chance that maybe it outperforms. But in general, I still expect the momentum of the market to transfer from Bitcoin to ETH. The only reason it would outperform is like the Bitcoin strategic reserve, and if a bunch of countries implemented that all next year, I think Bitcoin could do really, really well. And in general, I think Bitcoin will do really, really well. Like I'm very bullish on Bitcoin. It's just typically at this phase, if we're trying to map out the bull market, this is the point where the historically momentum shifts to ETH. And so it's been playing out to a T this cycle so far. So I still expect that to happen this cycle. I still expect that momentum to shift over to ETH. ETH is a much smaller asset. It's a lot easier to move up. We've already seen ETF days where the flows from the ETFs for ETH have actually exceeded the flows for Bitcoin. And this comes from a psychological principle I've explained many times before, that when Bitcoin gets to a certain price point, it just feels expensive to people, like in their minds. And because it feels expensive, even these asset allocators and all these other people, because it feels expensive, they say, well, Bitcoin's already gone up a ton. I missed that boat. But what about ETH? That's like still pretty cheap. And you understand these institutional allocators, like those are the two assets they're going to touch, Bitcoin and ETH. So when Bitcoin's priced up, and they feel like they're priced out, they're going to allocate into ETH. ETH, again, is a lot smaller, so it's going to be more price sensitive to that capital coming in, meaning it could shoot up quite a bit higher. So that's why you kind of expect that to happen. As far as the Bitcoin low next cycle, historically, if we're mapping that out, what you've seen is like Bitcoin retraces back to the previous cycle's all-time high. So that would mean that we would expect it to retrace down to about close to $69,000 during this next bear market. Now that could be different. That could change this cycle because we do have the ETF. ETF flows will only continue to accelerate year over year. I expect next year they're going to be even bigger than they were this year. And just each year, those things are going to go up. On top of that, if you have nation states and Bitcoin strategic reserves being deployed on all these countries all over the world, like there's a chance that it doesn't go below 100K. So, and there's a chance that it breaks that pattern because of that. So personally, if I was somebody that wanted to hold Bitcoin for 10 years, I would just be, DCAing in. I would be Michael Sayloring it, where I'm just, buying it every month. I'm holding, and that's that. And yeah, like it might dip back down, but you're kind of okay with that. And if you're trying to time it, this is not financial advice. This is just like how I would do it. I would be holding it to maybe late 2025, selling it late 2025, and then buying back in late 2026. And maybe that gives you the best chance at like maintaining those gains. But as a whole, I can't tell you if it's for sure going to go below 100K or not go below 100K, but I can point to the pattern, which is that in the past, it would retrace back down to, the previous all-time high, which would be around 70K. Okay, so we have this crazy alt season popping off in February, and typically what you see is that rolls into March, April, and May. So this alt season just like pops off. It's going crazy. Alts are going nuts, like shattering all expectations. When I say alts are going nuts, it's not like what alts were doing last February. It's not like what we saw in the bear market. This is bull market vibes. They're going way higher than you ever expected. And they are like blowing your mind. Like your mind is like crumpling up because you're like, how is this? This thing should not be worth this much. How did this, what you're probably going to do is you're going to probably sell paper hands something way too early. And it's going to go way higher than you ever thought possible. And it's going to hurt because this is what people do every cycle. Like you sell when you think, wow, this thing is like just 10x. It's time to sell, but then it goes on to do 1,000x. That kind of stuff happens during a bull run. And so, for me, I just like to hold on to them and see how high they go. Just because, it does get way crazier than most people expect, especially as the watermark effect takes place where, Bitcoin's moved the watermark up. Things can go higher now. As ETH drifts higher, that's moving the watermark up. So that means assets tend to be valued at a higher price point than what we saw in past cycles. So this goes all the way into May. And what we'll typically see is certain assets will peak in May. They'll hit like crazy all-time highs. They'll be like the top assets in crypto. And then we'll see a big pullback, a big kind of collapse in price where the whole market sells off. It's kind of like that saying, sell in May, go away. June is typically a terrible month. If you're mapping out the bull run, June is typically a terrible, terrible month. And then about like the second half of July, the market starts to pick back up again. It starts to gain steam again. And then, that kind of rolls into the fall where we see prices kind of like a whole new bull run, kind of like what we saw in February through May. We see that going into October or November, or in some cases, December. It depends on the bull market you're looking at. But somewhere in there, like into late 2025, you see like this bull market. If you're mapping it based off historical ones, you'll see this bull market really taking off, prices going crazy. But the big difference is in this second wave of the bull market, you see a whole different swath of assets hitting new all-time highs. And typically this is more like the more powerful of the two. So like you have that first wave, which is pretty powerful, but this second wave is even more powerful, where like maybe the first wave, you have some things doing 100x. The second wave, you have some things doing 1,000x kind of thing. So, but the assets that really hit all-time highs in the first one, not all, okay. A lot of assets will hit all-time highs. What I mean is the top assets, maybe say like the top 50 crypto assets that are hitting those all-time highs. Those ones tend to not eclipse those all-time highs in the later half of the year. Sometimes they'll retrace all the way back up. Sometimes they won't, but they certainly don't typically eclipse those. Instead, you see this new wave of assets because those ones already did their big performance. Those ones already had their big finale. Everyone was blown away. Now they're looking for the beta of those assets, the next of those things to do well. So now they're looking at like smaller assets, and those are the assets kind of take the throne in the second half of the year. So they kind of rise up from the ashes and overtake those assets that did well the first phase of the bull run. And these ones do crazy multiples. Like at this point, everyone and their mom is like just like foaming at the mouth for crypto. And so the second wave just goes bananas, like the banana zone of the banana zone is what I call it as of now. And it just gets crazy. And so these assets are popping off. And then, yes, at some point, kind of later in the year, it like kind of tapers off. Bitcoin does. So Bitcoin maybe hits an all-time high in October, November, December. It's really hard to tell because there's not in 2017 it was December, in 2021 it was November, and so if you kind of follow that pattern, maybe it's October this cycle, and then you'll see alts kind of run a little bit longer than that. So Bitcoin tapers off, but the alts kind of keep popping off, And then at some point we transition into Ponzi season, where the Ponzi start popping off because everyone has exhausted every other opportunity. Everything's gone up. The last like kind of lazy people to the bull market are like, I missed everything. Everyone's rich. What am I going to invest in? And then like the Ponzi's pop out and they're like, invest in us. And they do, because, you know, at that point, everyone's so greedy. They're just like, yeah, you know, that sounds like a good idea. Memes, that all that kind of stuff would go crazy during that phase of the bull market. So that's like the typical process. I'm gonna stop there and go through some of these questions, and then I will continue on to what happens next and hit on some of the nuances of like when certain narratives and asset prices or asset classes pop off in what like phase of this mapping out the bull market. The first question comes from Makesy, and he says, what is your guess as far as what kind of projects and narratives will peak before May? I assume the same projects won't make a comeback for the Q4 2025 rally. And second question is, do you think Q1 2025 or Q4 2025 will be the biggest alt season? I think because some believe most coins will run in Q1 and in Q4, we will only get selected coins that will pump while most won't. To answer that, typically what you're seeing the first wave of the bull market is the projects that are performing are the more consensus projects, the things that people kind of already know will perform and they're already ready to perform. Like it's like again, if you're looking at the rotation, they look at Bitcoin, ETH, you know, the alts, lesser alts, that kind of thing. So they're working their way down the stack. So that first kind of portion of the stack that's already kind of popular, that's what does really, really good, the first wave of the bull market. The second portion of the stack that's a lot smaller is what does really, really good, the second wave of the bull market. And it's not like an exact rule, because some of those smaller things will do good the first part, and some of the bigger things will do good the second part. But as a general rule, that's kind of how it ends up playing out. As far as like if those projects will do a comeback rally in the second wave of the bull market, I kind of answered that earlier. Some of them will, some of them won't. It's kind of a mixed bag. As a rule, as a whole, most of them do not end up outperforming what they did during the first half of the year. And then on the last question of like which one will be the bigger rally, again, I think that the second bull market is like the banana zone of the banana zone. That's typically the bigger rally. And as far as like will only certain alts pump and like will others will most of them not pump? I disagree with that take. That's bear market thinking, right? That's you like looking at the bear market where it's like a money ball rotating around. It's like PVP, where capital just moving between narrative ideas. And so you get used to that being the norm, but that's not the normal during a bull market. A ton of new liquidity enters the market and it's not as PVP. Instead, it's in general, everything is going up. Everyone's greedy. You know, in general, the market is going up. And when I say everything, I don't actually mean everything, but I mean most things, like the things that are good, the like somewhat quality things tend up doing good. There obviously is just a really long tail of just garbage within the crypto sector. Some of that does do well. Some of the vaporware does end up performing. But as a whole, it's mostly focused on like the things that are really, really good, that are really, really quality. Most of those catch a bit. Like the majority of those end up doing well. It's not the same thing as what you typically experience during the bear market. The bull market, people are like looking everywhere. They're like fervent, looking for like every good opportunity within crypto. And so they find all these things that like have been sitting there all bear market that, you know, maybe you've been looking at or holding all bear market. They go out and they find those, and then they get a lot of attention. They run up quick because that's what people are doing. They're a lot more quick to discover these things during a bull market, where in a bear market, it's like, unless it gets caught up in a popular narrative, and even then, it doesn't really push up because it's just like there's only so much money to go around. All right, another question from Perennial is, there are a lot of narratives you mentioned that will probably play out this cycle. How do you think liquidity will flow after Bitcoin, ETH, and blue chip alts, etc.? Will AI and gaming blow up together, or will AI happen early and weaken as gaming strengthens? When in the cycles do you think things like index and winter will see inflows? This question kind of leads into the next part I was wanting to go into, which is mapping out like when certain sectors pop off in the bull market. And you can get a general rough idea by using the framework that I've talked about before, where it goes from the bigger things to the smaller things. But there's other things. There's other things that dictate when certain things pop off. For example, NFTs are a great example. NFTs are a late cycle phenomenon. We're seeing some price action around NFTs right now because the Pengu token that's being released by Pudgy. And so Pudgies are going up, and so everyone's looking at like what other NFTs are going to go up next. Maybe that's a mini NFT bull market. But like NFTs as a whole don't tend to pop off until people have a lot of money. For example, think of Ether rocks. Ether rocks are pictures of rocks. They're like meant to be the stupidest possible NFTs. They're like a meme NFT in some ways. They're like a joke about NFTs, saying that NFTs are just these stupid JPEGs. They shouldn't be worth anything. And some of these Ether rocks, last bull run, were selling for like $13 million. Like people were bidding $13 million. It's literally a picture of a rock. And the reason was they had so much money to throw around. They would throw around $13 million for a joke because they thought it was funny. Because that's what people do when they want to flex and show off during a bull run. There's so much money to throw around, they'll do stupid stuff like that. And so they're not going to pay like these exorbitant prices for these luxury items until they have the money to pay for that. So it's like, think of NFTs like, a Lambo or a Rolex or something. Like it's a status symbol. And you only dive into those things when you have the money to throw around. Gaming assets are somewhat similar in that like they need the proper wealth effects to they don't need it. Okay, so like you could have a game just be a breakout success, and that brings a lot of mania to the crypto gaming sector. That's totally possible. But the way it historically has played out is when people have a lot of money to throw around, there's like a subset of the market, not everyone, but there's like a subset of the market who says, oh, we really believe in gaming. We think these gaming assets are going to go up in price. So we're going to bid them early. We're going to front run the market, buy these gaming assets and push up the price. They have so much money to throw around, kind of similar to NFTs, that they don't really care if they're wrong or right. They're just like throwing money into these things. And so you'll see them bid up these gaming NFTs, gaming assets, gaming items, in-game tokens in some ways. And that'll push up the value of those things. And because the value of those things goes high enough, like there's a certain mark where like the players are suddenly like, wow, it's really worthwhile to play this game. I could play this game for like a week, put in a week's worth of work and make $500. Like that's worth it for me, or $100 or whatever it is. Typically it's like a third world country where maybe they don't make as much money. And like the value they can get out of this game is insane to them. That's like, the equivalent of in the US, you're making $10,000 a month playing a video game, that kind of thing. So when these assets get bid up enough, it starts to bring in players who want to earn these assets they can sell to these people they're bidding them up. And that causes kind of like a reflexive loop, right? Because people are playing the games, that says, oh my gosh, look at these metrics. People are playing these games. They're starting to take off. That pushes up the token. That pushes up the assets further. That brings in more players. Push up token, push up the assets. And that's kind of the reflexive loop that causes games to pop off typically. And so expect that later in the cycle, money's sloshing around, assets get bid up, attracts the players, and then it just kind of reflexes until these things just skyrocket in price and get really, really, really big. And the bonus this cycle is that we actually have a ton of really good crypto games that have been developed over the past like 5 years. A lot of money had poured into the sector after the last cycle. A lot of teams and development came into the sector. And even during the bear market, these like the AAA teams, AAA studios that worked on games like Call of Duty and all kinds of big games are coming in because the fundraising aspect of crypto is insane. It's like so easy for them to raise money for a game that traditionally would be really hard to raise those funds, and they love it. So like there's been a lot of really quality building in the crypto gaming space, and all you really need to see is one crypto game pop off. Like think of like Ronin last cycle, Axie Infinity. If you have one crypto game pop off and one crypto game token goes to 20 billion, 30 billion, 50 billion market cap, well, everyone's going to look around and say, even if all the other games were crappy, they're going to look around and say, okay, so-and-so game went to 50 billion market cap. What's going to be the next so-and-so game? And they're going to bid on all those other games and push those tokens up. That's how it works. Like it's just psychology. When people miss out, they're going to look for the next opportunity. And I hope I'm drilling this in like all my podcasts and videos. Like people miss out, they're going to look for the next opportunity. When people miss out, they're going to look for the next opportunity. And so that is what you typically see with gaming. So to answer Perennial's question, typically the typical kind of route for liquidity to flow is going to be down the stack to cheaper and cheaper alts, or up to 3 degrees of separation. So things that are somewhat related in people's minds. And that gets really complex the lower you go in the stack, because, for Bitcoin, it's maybe a little bit easier to map out. Like these are kind of the things that people relate mentally to Bitcoin. But as you get down to like gaming tokens or AI tokens, it gets harder to figure out like what people are going to connect or say in their minds, like, oh, this could be the next thing to go up. It gets more complex, kind of infinitely more complex the lower you go down the stack. But as a whole, you're going from the top to the bottom. And then there's certain assets that get wealth effects, and that shoots them up. AI is really consensus, I would say, for AI as a narrative. Like everyone knows AI is bullish. Like when your mom comes in, when your dad comes in, your grandma comes in, they're gonna be like, oh, crypto, like AI, I heard that about that. That's a probably a good one to invest into. And, they haven't been able to invest in any AI stuff, like venture capitalists have been able to, like VCs have been able to invest in a bunch of AI startups, but like the public has not. They have Nvidia at like 3 trillion market cap. That's it. That's their play. Not really much else going on there. And so they're going to be pretty pumped to invest in these crypto AI things. And they're not going to really know like, which one's like stupid and which one's smart. There's a lot of trash in the crypto AI sector, and they're honestly not even going to care. They're just going to see AI tagged at the name of it, and they're going to be like, that's a good play. I'm going to put money in that. So I think AI probably peaks earlier in the cycle because it's just so, like, everyone knows AI is going to pop off in a crypto bull run. Everyone knows it. And a lot of these AI assets have already been bid up quite a bit, but not enough. Like, they're going way higher because when people come in, that's one of the first things they buy is AI. So I think AI bids up early, but it could bid up both sides, like both legs of the cycle. It could do really, really well. That's one of the sectors where it's just so hot right now. Like so many people want to invest money in it that I don't know if that slows down at all. And as far as finishing up Perennial's question, as far as index and winter, those ones are they're like more difficult to phase. I would say they probably do well in that second bull cycle. So not as much like the first one, they might do okay. But like I would orient them in my mind as doing well during that second phase. Because the second phase is when you start breaking out of consensus narratives and you start breaking into new things and people looking in maybe newer places to try to find opportunities because, some of these AI tokens are already over 100 billion and all the things they thought would do well already kind of seem expensive to them. And so now they're looking at things they didn't think maybe about at all. And, maybe crypto gambling, maybe index funds on chain. That's about when they start looking at those things. Moving on. So we have all this stuff. We go into Ponzi season. Ponzi's are popping off. And that leads to the finale of the bull run, which is the 2026 crash. And, I again, hold these things loosely because it could be that, we peak in May and then we crash after that. It could be we peak, we have the second leg of the bull market, we peak in October or November or December, and then we crash after that. Could even be that we roll into early 2026, January or February, and we crash after that. It's very hard to tell. As I mentioned, alts tend to run longer than Bitcoin. So last cycle, alts ran all the way into like March of 2026. And then we had the floor fell out, or Ponzi's did. Ponzi's ran all the way into March 2026. And then the floor fell out and everything collapsed. We had Luna collapse, FTX after that, and all kinds of really, really bad stuff. But as a whole, I firmly believe we will have a 2026 collapse, 2026 crash. And the reason I believe that is because when you have a mania phase of a bull market, you have too much fluff and leverage enter the system, and you have to weed that out. You have to retrace from that fluff and drain it out. Okay, that has to happen. When you have too much leverage, it makes the market unhealthy, makes it unstable. It only takes a little dip to take the whole thing down. It's like playing Jenga. You've removed too many pieces to make the tower really, really big, and it takes somebody kind of leaning against it, and the whole thing collapses, and you got to rebuild again. So that if you have a mania phase, you will always have a collapse phase. If you have a frothy phase where something goes way too high, it's going to correct back down and find its true value. Those two things go hand in hand. There's no stopping it. And it's not about like, will inflows in the ETF continue? Yes, they will. Will Bitcoin continue to be bullish with these, nation states adopting it? It probably will. It's just about if it goes too high, it's got to come back down and find its true value. So you're going to have a correction after the fact, right? And the only reason you wouldn't have this is if we don't have a bull run, like I'm saying. If we don't have a frothy bull run mania, that's also bullish because then we're just going to keep kind of sputting along in 2026, 2027. Like there's no reason to have an unhealthy. That's why people right now, like they're like scared. They're like, oh my gosh, is the bull market over? Are we going to, collapse? And is it done? People were saying that like a couple of days ago because, we dipped 3%. People are just absurd. They're going to get wrecked this cycle. But the reason we're not going to have that is because we don't have this amount of frothy leverage in the system. There's leverage in the system, but it's not like the insane kind of leverage you see in a mania bull phase. It's just like really normal, just typical leverage. We haven't seen the markets get overheated. Maybe some of you guys feel like that because meme coins are popping off. But that's just meme coins. Meme coins are popping up. They've gotten maybe unhealthy. Maybe they're due for a correction or whatever. But as a whole, crypto has not gotten into that overheated phase, and we're doing just fine. Okay, so you got to have the leverage into the system to have those epic collapses. And without that, we're just going to keep we're doing pretty good right now. We're going to keep just kind of drifting along. So if you don't have a mania phase, you won't have a 2026 collapse. But if you have a mania phase, you're going to have a 2026 collapse. Dropping down to some more questions, Shanad asks, there's many who believe February time will be the end of the cycle and we're close to the top. What makes you bullish that we might go into next summer? It's a really good question. I kind of just addressed that in that, there's just not enough mania. There's not enough froth in the system for us to have an epic collapse. Now, it's possible that we just continue doing what we've been done for the last couple of years. So like maybe the mania doesn't spark. Maybe we kind of float into, it still wouldn't be February, right? It would still be like March or April. And then we peak, sell in May, go away kind of thing. And we kind of go through what we experienced this last year. So it's like semi-bullish, does really well. And then the second half of the year, we have another rally. And we just kind of keep doing that for a while until we spark a bull run. That's always possible. But the reason I would say I feel like it's unlikely is, again, if you look at the past cycles and how they've mapped out and how eerily similar everything up until this point has been. I mean, I was talking about, I mapped out back in late 2022. I was talking about how 2023 was going to be this bullish year, how late 2023 we'd have a rally, how into 2024, early 2024 we'd have a rally, how after the halving we would crash, how late 2024 we'd have a rally, and how into 2025 I mapped this all out back in late 2022. And the reason I was able to do that is because I was following the pattern in the map that we've seen in the past. And it's followed it to a perfect T. Like it's been perfectly in line with what we've seen in the past. And so you kind of the reasonable thing is to expect that to somewhat continue, not to blindly follow it, but to, if it's followed the pattern so far, you kind of expect it's going to keep following the pattern. You're prepared if it doesn't, if that doesn't happen, but you're kind of expecting as a whole, it should, as the most reasonable outcome, continue to follow that pattern. I'll also say that the vast majority of people are usually wrong, okay? Again, just like a few days ago, people were saying, oh, it's this is it, it's over, Bitcoin's dipping, this is the biggest liquidation event since 2021, we're done, it's over. And people were talking about they're selling. That was most people were talking about how it was over. Okay. And then a couple of days later, we're boom, skyrocketing again. All right, a month and a half ago, people were talking about the meme coin super cycle, utility coins are dead, sell all your alts and buy memes and all this nonsense. And then boom, alts started skyrocketing. They've been doing insanely well and they've captured the market share of attention. So in general, most people tend to be wrong and whatever they think tends to be off. Not always. Sometimes they everyone knows something's going to happen. That happens. But as a basic rule, if most people are saying something, that doesn't mean it's somehow more accurate or they have it right. If anything, it typically means that's not what's going to happen. That's why Jim Cramer is such a good reverse Uno card, reverse indicator where, because he just kind of says what's popular. He's just the voice for what is consensus. So when, something's popular, he'll be yeah, I'm really bullish on that. And when something's not popular, he just tells people what they want to hear. He'll say, that is stupid. So, and he tends to be wrong because people, when something's popular, it's peaked, right? And when it's unpopular, it's maximum opportunity. So it just doesn't end up working out that way. Next question is from Pete Unhype. He says, it's different this time. We've heard that before, but this time it actually is with ETFs, institutions getting involved in pro-crypto U.S. government soon. How do you see this affecting the market short-term? A super cycle, perpetual bid, or will we pump higher than before with a massive crash like we've never seen before when all these extra institutions sell their huge bags, or will things actually be more stable now? This is a really, really, really good question. I think we pump higher this cycle in some ways because Bitcoin's so big, so it's not in percentage terms it's going to be that much higher. But we pump higher in terms of raw US dollars, it'll be way higher than what we've seen in the past. So we pump higher. We have more of a bid this cycle. But again, if things get too frothy, you always are going to have that correction. If things go up, they get too frothy, people think they can make money, they're smarter in the system, leverage enters the system, things get shaky and it collapses. You cannot avoid that. There is no possible way. I don't care how bullish like the setup is, there's no way to avoid that. So you're going to have a correction and collapse that comes after that. Now, it could be a muted collapse because people are still bidding. Like maybe people learn. Maybe this is the first cycle people learn. It's like I was thinking of Goldman Sachs. Every cycle, they're like, we're starting this crypto thing. And then as soon as the bear market hits, they like paper hands it and like shut it down. And then they regret it at the start of the next cycle. They're like, oh, we should have kept that, but we're starting it this time. They do. It's like, I watched every cycle they've done something like this. It's really funny. And you've seen a lot of other people do that where they're like, I'm super bullish crypto, throw their life savings in at the top, lose it all, paper hands it. In the middle of the bear when they should be buying, they don't buy it and they buy back at the top of the next cycle. Okay. So in the same way, it's possible that institutions finally learn this time and maybe they're a little bit more responsible and they're like buying even as we dip. They're like, they take the Michael Saylor approach. They're just DCA in. And maybe that mutes the collapse. Maybe we have a muted collapse. It's not quite as bad of a drawdown in general because Bitcoin's bigger. The drawdown is just going to be less as a whole. So maybe you have that. It's like less of a collapse in some ways, right? You're still going to see some of these alts drop 90%. Or 99% in some cases. So you're still going to see like a massive collapse in the alts because they don't have those same bids. Maybe it just specifically is in relation to the top assets. You see that. But in general, I don't expect it to really change much except for like the degree of volatility you see in a bull and then maybe a little bit of a muted volatility in a bear market. But, I think it's bullish. I think all these things are insanely bullish and people are still not correctly pricing it in. I think we definitely have a clear path to Bitcoin at $1 million one day. Bitcoin will be 1 million per token at some point one day. That just seems so clear and obvious at this point. We overcame every possible hurdle that was in our way. We've gotten the single most bullish outcome. So Bitcoin just keeps going up. Like after this cycle, we'll have another cycle, another cycle, another cycle. They might not look exactly the same, but over the course of the next 20 years, 15, 20 years, crypto will continue to be basically up only, although 99% of tokens each cycle that pop up and are like the darlings of that cycle will not survive. This is the same thing as like VC land, right? Like with most startups fail, okay? Each cycle, each new batch of contenders, there's like a portion of those that will move on to become great companies and continue building. We have cash flowing companies like Maker, Aave, et cetera, that have like built real businesses. You're going to have that happen. But as a rule, it's probably not a good idea through each cycle to continue to hold certain bags. Like certain things are just going to die, and you gotta live with that. You gotta accept that, and not hold on to the past too tightly. Most of these tokens that are really popular this cycle will not be popular next cycle. They are going to die and go, exist forever in like some zombie graveyard. Okay. When I say crypto as a whole, like there'll be new tokens coming in next cycle, that'll be Bitcoin and ETH, and that'll be a certain portion of these that carry over into the cycle. It's, as a whole, as an industry, bullish the next 15 to 20 years. Crypto is going to do fantastic. If you've ever seen the ETF chart, it is absolutely mind-boggling the amount of flows that you see gold just do year over year over year. It just accelerates over time. You're going to see the same thing with Bitcoin. The flows are going to get bigger and bigger year over year. So really, really bullish long term. But yeah, there it is. We've mapped out the entire 2025 bull run. Look, comparing what we've seen in past cycles. I hope this has been helpful as like a mental framework for maybe how to look at this bull market and how to anticipate it. Again, one last disclaimer is that it's never exactly the same. Maybe it is. Maybe it is exactly the same. Actually, in crypto, it has been very, very similar. But at some point the cycle will break. So don't take this as like gospel truth, okay? This is just a framework for you to view things, but you have to be nimble on your toes, right? Like you go into a boxing match and you might know like the framework for like what to do in a proper sense. But when people start swinging, when you start getting punched in the face, that kind of goes out the window and you got to adapt to a degree. So stay on your toes, be light on your feet, adapt to as the market goes. But keep this as a loose framework to kind of view things. Maybe it gives you a little bit of strength during some of these dips. Maybe it gives you a little bit of confidence during some of the run-ups, and maybe a framework that kind of helps you succeed a little bit more. But please don't take it as, absolute truth. As always, none of this was investment advice. None of this was me telling you to invest in anything or how to do anything or anything like that. It's just my ideas and thoughts for you. I think it's useful and helpful for people to kind of learn to build their own mental frameworks as they navigate the market. And yeah, that's it. I'll catch you later.